Informative, educational, objective, inclusive, comprehensive. This is Progress Report. Updates and conversations from the Government Information Service.
Good day and welcome to another episode of Progress Report. My name is Ivan Khanna, my lovely co-host Gleneva Hodge. And as you can see, for those of you watching, those of you listening on here, I'm actually outnumbered again today. This has been the trend. From last season, this season, it's me, the sole gentleman on the set. The thorn among roses, if we may put it that way. But I like it like that. It says something that we're going to touch on later.
I think you had me outnumbered the past few episodes.
One episode we are outnumbered. But it's for a good reason. We have with us today two beautiful, lovely, intelligent young women. I can call you young women.
Of course.
All right, I know that. See that they're gonna say I'm flattering.
Flatter will get you everywhere.
Everywhere, apparently. From the Anguilla Social Security Board. So we have with us Ms. Magdalene Lewis, Dr. Magdalene Lewis, who is the Deputy Director, Acting Director. That's your current role. And we have Ms. Rosanna Brown, who's the Public Relations Officer.
Correct.
All right. So, I mean, if we're being honest, Social Security has been a little bit of a slow burner topic. Is it a hot topic these days?
It should be.
It should be. I think it should be. But we're gonna get into that stuff. We're gonna get into what's on the street right now. We're gonna get into just the nitty gritty of it. I mean, what is Social Security? Like at the most basic level.
You know, and I don't know if the public relations officer is responsible for some of those ads that we hear on the radio. But they play into your ears and you hear them and you remember them. So we're gonna get into some of that.
All right. We're gonna deep dive into Social Security. We're gonna look at the actuary study that was recently done. I'm gonna tell you this. You guys know I don't spare no corners. Get your information from a factual source on the most basic level. I don't want persons to start to put their own spin on what was presented and make it seem like this is happening, that is happening, when we don't know the facts. So we're going to get into some of the facts today. There's a lot to unbox. There's a lot to talk about with respects to that study, with respects to the state of Social Security right now, and what's the plans. I know you have a lot going on. You're going digital, right?
You've gone digital.
You've gone digital. Here, there. Let me stand corrected. You've gone digital, and that's something new. So we're gonna touch into all of that. Let's touch into that stuff before we actually talk about the actuary study.
I think it's more important that we do it a little bit different than we normally do.
Okay, folks, I say this all the time. This is Gleneva's show. I'm simply part of the cast. I'm the makeup. So she says we're gonna do it differently.
Yeah, so we're gonna do this show a little bit differently. What we're going to do is, before we get into our discussion, we're going to hear from Mr. Derek Osborne, who is the actuary who conducted the actuary review. So we're going to listen to that, so that when we get into the discussion, the audience can appreciate some of what we're saying. Okay. So we have that information to fall back on. And I know that during the public consultations, this recording was also played. And listening to, and I'll put this out there, listening to the recording, you will hear references to some graphs, to some images that we don't have. But I'm certain those images are available on the Social Security's website. We'll get into that so persons can know where to go and find that. So we're gonna listen to that, and then we're going to go into what is social. So we're gonna forward, jump back.
All right. So we're gonna play hopscotch this morning.
Yes.
That's what we're going to do. So right now we'll take a listen to the presentation by the Mr. Derek Osborne, who completed the study, and then we'll deep dive into some things about Social Security.
Greetings, everyone. My name is Derek Osborne, and I'm an actuary with the firm LifeWorks. And last year, we conducted the 12th actuarial review of the Social Security Fund. Every 3 years, the board is required by the Act to engage an actuary who assesses the current and projected state of the fund. This is the 12th actuarial review, and the report was laid in the House of Assembly several months ago. If you think about why Social Security exists and why it's so important for the people of Anguilla, the goal, the main objective is a comprehensive system of social protection that reflects Anguilla's value system. It responds to changing conditions, whether they be social, economic, demographic, and so on. And finally, it satisfies customer needs. So it's really an all-encompassing income replacement program that is really critical to the livelihoods of many Anguillians. And when we look at the future and the current as well, state of the fund, we look at three key things. Are benefits adequate, both when they're paid and how much is paid? On the flip side, are contributions affordable? If you think about benefits and contributions, they go in opposite directions. If we want bigger benefits, we're going to have to pay more contributions for them. And the third thing we look at is sustainability. Are we going to be able to deliver on the promises that have been made to generations to come, our children and grandchildren, without having to charge them very high contribution rates? On the right-hand side, we talk about what we're trying to avoid. The first thing is we're trying to avoid the fund ever being depleted or exhausted. We're trying to avoid situations where the fund may have money, but may not be in cash, and therefore pensions may have to be late because not enough cash to make pension and benefit payments. And finally, we also are very concerned about people going without. So in Anguilla, there is no formal unemployment benefit. Twice now, it's been implemented on a temporary basis. And so one of the objectives is to possibly implement a new benefit for unemployment. And the last point here is that there are many, many more self-employed people now in the labor market, and many of them do not pay contributions. The taxi driver, the vendor, the plumber, the carpenter, even the doctor and the lawyer. We want to ensure that when they get older, that they have a secure income to live comfortably in old age and not be a burden for their children, their other family members, or even the community and the state. So over the past 40 years, Social Security has a very good experience. We see these four charts here that pretty much describe the entire financial history of the fund. On the top left, we see that the contribution rate at 10% has been more than expenditure for most of those 40 years. In 2018 was the first time that the fund actually experienced payments out being more than contributions coming in. And that's why we see the green line is below the black line for those first 38 years. And then after that, it's above. And since COVID, the green line has exceeded the black line. The size of the reserve has been growing every year. However, the relative size of reserves compared to expenditure has been decreasing. And these two top charts are typical of all Social Security schemes in the region, where over time, the expenditure rate goes up. Eventually, it touches the contribution rate and surpasses it. And on the right-hand side, the reserves grow initially in the first few years, and then the reserve ratio comes down. What we want to avoid is the reserve ratio ever reaching to zero, because then we have no fund. And we also have to decide when is the right time to raise the contribution rate so that we don't keep dipping into reserves and eventually exhaust all of the previous savings that have accumulated over the first 40 years. The lower two charts show the yield on investments or on reserves, which has been relatively low in the last few years, and also shows the level of administrative costs as a percent of contribution income, which have been quite high, almost 25-30% of contribution income is required to pay admin costs, and that is high by regional standards. We know Anguilla is small, but that cost certainly is above what we would expect from the fund. So the review looks at the future, and we've projected the population out 60 years under 3 scenarios. What we see here are 2 things. On the left, the population could grow to over 20,000, or it could remain pretty much where it is now at over 15,000, and then eventually get slightly smaller. The key challenge, though, for the fund is that what we project is an aging population, where the number of children is going to decrease, whereas the number of pensioners, which is the biggest cost item for the fund, is going to increase. And that is the challenge that the fund will likely face in the next 20 to 50 years. When we project the fund, that is the actual dollars and cents that the fund has in reserves, we project that the fund will be exhausted between 2035 and 2038. So that is within the next 13 to 17 years. That's not a long time away. And this says that if we do nothing, if we leave the rate the same, if we leave the benefit formula the same, if we leave age 65 unchanged as the age for pensions, then the fund could be depleted within the next 13 to 15, 16 years. What we see on the right is that every year going forward, we expect expenditure to exceed contributions. We expect expenditure to exceed all income in the next few years and every year thereafter. And finally, if we do nothing and the reserves actually become exhausted and there are no more savings on which to draw, then the contribution rate required to meet benefit costs would be between 21% and 25%. And that means that the contribution rate would have to be increased to that level from 10% today, more than double in the next 15 years to help meet expenditure. And so when we assess the fund and we look at all of the aspects, both the financial as well as the social adequacy aspects of the fund, we identify these 5 challenges and concerns. Number 1, as you can expect, is long-term sustainability. We do not want the fund to be exhausted in 15 years' time. This is the same challenge faced across the region by every single fund in the Caribbean. And many governments are trying to find a solution that fits their particular country, their particular circumstance, to ensure long-term sustainability. The second one is diversification of investments. A large portion of it is a payment from the government of Anguilla. And so hopefully over time, we can find a way to diversify the investments and get a greater rate of return on the fund. I mentioned earlier high admin costs, and I mentioned earlier as well the growing number of self-employed people who are going without paying any Social Security contributions. Right? We need to make sure that the taxi drivers, the vendors, as I said, the tradesmen, lawyers, doctors, all are covering themselves so that when they turn 65 or 67, they'll be able to receive that lifetime pension. And finally, and I'm really pleased that what the Social Security Board is now doing with these stakeholder consultations is public awareness. It is important that the public know and understand the challenges that are faced by the fund and the measures that are going to be required to ensure that the fund is sustainable for the long term. So the question could be, how could a fund as large as Social Security fund be exhausted within 15 years? And there are 4 reasons given before us. One is demographics. We have no control over that. But if you think about family size over the last 30, 40 years, we're having fewer and fewer children. And that affects governments when it comes to taxation revenue. It affects the fund as it comes the number of people paying in to everyone taken out. As we see here, there are about just over 5 contributors for every 1 pensioners. 20 years from now, that number may fall to 2.5, and then just around 2 40 years from now. We also have a generous pension system. The scheme was designed 40 years ago, and what has happened is that half of the maximum pension is earned after only 10 years of contributions. And so someone coming to Anguilla at age 45 or 50 can get a very, very generous pension, having worked only 10, 11, or 12 years. The third point is that there are no guidelines. The actuaries have come in every 3 years, made recommendations, but there's no requirement for the government to act to ensure that that changes are made to make the fund more sustainable over time. And lastly, this is a challenge faced in many other countries, that politicians and governments tend to kick the can down the road when it's tough decisions to be made. So what we hope in Anguilla is that through these consultations, there'll be acceptance of the reforms that are required to save the fund, and therefore the government will be confident making those changes in the not too distant future. So while the projections show that the fund could be depleted within the next 15 years, all is not lost. We believe that there are possible changes that can be made. There are 4 ingredients for success and for sustainability. And the first one is a growing economy. The last few years have been challenging. Anguilla has had a history of periods of boom and some economic downturns. And so the number one ingredient for sustainability is a healthy and growing economy. Number 2 is good design. The fund, as it looks today, was designed over 40 years ago. Life has changed, labor market has changed. People are working differently. And so we have to find ways to ensure that the benefit formula, how much you contribute, when you contribute, how you contribute, all of those things are consistent with how life is in Anguilla today. Thirdly, we want to have effective and efficient admin systems. I mentioned cost a while ago. We want to ensure that more of the contribution dollar goes towards paying benefits. And so efficiency in contribution collections and benefit payments, and also working together with other government departments to ensure that those who are required to pay contributions pay their contributions in a regular and complete way. And finally, we talk about good governance, what I like to call honest and responsible government. And that's not only the minister and the cabinet and the board, but it's all levels throughout the organization, making sound decisions in a prudent way in advance of crisis hitting. And so the recommendation is that we put in place guidelines that are going to ensure that there's transparency, that there's accountability at all levels within the board, and that there's consultation when it comes to making these changes as we're having today. And finally, the report made several recommendations. And these recommendations are designed to, first of all, enhance sustainability and ensure that generations to come do not have to pay double of the 10% today for a smaller benefit. So on the top left, we have benefits. We want a less generous age benefit. Probably keep the same 60% maximum, but you achieve it over a longer period. We average wages over a longer period. Right now, it's only over 3 years. We're going to recommend either at least 5 or 7 years, which means that the benefit has a closer link to your actual wages earned over time. We're recommending including, as I mentioned earlier, a permanent unemployment benefit. That is the one real benefit that the fund is missing right now for income replacement. And so we recommend that be added on a permanent basis. On the right, we recommend increasing the contribution rate. Anguilla has one of the lowest contribution rates in the region today at 10%. Many are moving towards 15%. In Barbados, it's 18.25% for the same benefits that you now have at 10%. And so we recommend at least a 12% benefit in the next few years, possibly to 15% as well. We recommend a new way for self-employed people to contribute. They don't have the time, some of them, to come to the office between 8 and 4 to pay their contributions. Times have changed. We want the fisherman who had a good fishing day to be able to go on his computer and just pay contributions as he can. We also want to improve compliance through effective links with with government departments, and again, to ensure that those people who are supposed to pay contributions on time. Number 4 is admin costs. We saw the cost over 25-30% of contributions. We can find a way to reduce that gradually over time. The investment policy needs to be updated. We also recommend 3 new policies for funding, benefits, and risk. And as I mentioned a while ago, good governance guidelines. We know that there's a company, a subsidiary of the Social Security Board called a CIDCO. We recommend that it be reviewed to determine whether or not it's still needed. And then finally, as I mentioned earlier about consultation and sharing the news, is to share the actuarial review, share financial statements, and all of the board's reform ideas on the website and in public discussions as we're having now. So compliments to the board and the management for starting these consultations with the general public to ensure that when changes are going to be proposed and are recommended, that the public understands why and is buying from you as well. And on the lower left, we want you to start considering increasing the wage ceiling. It hasn't increased for many, many years. And it may be time to look at increasing the ceiling so higher income people can qualify for slightly bigger benefits. And finally, increasing the age from 65 to 67 for the age pension. And so I'm going to stop there. And what I would say is, again, I look forward to hearing the results of these stakeholder consultations. And the goal is certainly to ensure long-term sustainability at an affordable cost for generations to come. So those 3 final words I'll use again at the end. Adequacy of benefits, affordability of contributions, and long-term sustainability for children and grandchildren to come. Thank you very much.
All right, so there you have it. You heard a very interesting report, if I can call it that. Can I call it a report?
Yes.
Yes, you heard a very interesting report. There are a number of things that kind of jumped out at us, but a summary of the report. There are a number of things that jumped out at us, but let's take it all the way back a little bit. Just so people understand, those who may be listening, we have a number of young people on that listen to the program. What exactly is Social Security and why would they be contributing to Social Security? If we can start there.
Okay, well, good day. Thanks for having us.
Great,
on
pleasure.
Progress Report. This is our first time here. Hope it won't be our
It
last.
definitely will not.
But what is Social Security? Social Security is social insurance. So to make it simple and easy to understand, it is likened to having health insurance, vehicle insurance. So it is a social safety net.
Okay.
We in Anguilla like to say that the only social safety net that Anguilla really has is Social Security. So it's a social insurance program where workers and employers pay into the system so that when the employees are unable to work, then they have some sort of income replacement.
And this is unable to work because of age?
Because a number of contingencies, but the contingencies that you are insured under and covered under for Social Security are sickness, maternity, paternity, old age, retirement, survivors, disability, and of course we have a funeral grant that we offer, and we also have a non-contributory old age pension that we offer. So those are the benefits, and they are short-term and long-term. So.
Before you go, Gleneva, you said a non-contributory old age pension.
Yes.
So persons that are elderly, they would not have contributed to Social Security, but they get a pension? Is that what it is?
Yes, because Social Security is a contributory program. So you contribute while you're working so that when you're unable to work, you then receive the benefits from it, some sort of income replacement. So non-contributory, as the name implies, you did not contribute to the system, but because of certain situations, you are at a certain age, you're over age 68 years or older, and you're in a position where you're not financially able to take care of yourself.
Okay.
So it's means tested, and
nice.
it's means tested to verify that your situation is really what it is, and you qualify for the benefit, and it's offered. So it's a small benefit.
Bearing in mind,
Uh-huh.
you must have not had the opportunity to contribute.
Right.
That
Okay.
is, so our compliance staff, they will also provide information on the person who applies, whether that person should have had the opportunity to contribute.
Okay.
Sometimes it depends on how long you are probably in Anguilla, how long you're working. It should eventually be phased out though.
Okay.
Because everybody by now should have
Right.
had that opportunity to contribute. So there'll be a few people that would not have had it. And what will happen at age 68, some persons will be on social development, and they will send their names over to Social Security at age 68.
Okay. I actually do have
Go ahead.
a question. I can see that we're going to have a very long discussion today. I'm thinking about the current climate in which we live. And when I think about non-contributory pensions, I can think of older persons who may not have been working, may not have been exposed to. Given the context of someone who is maybe a stay-at-home mom, who doesn't work, but they work from home, would someone like that qualify for non-contributory pension? And if not, is there a system for that person?
Social development is always there for
Okay.
those persons. And as I said, it's means tested, so it would depend. I understand what you're trying to ask. If that person was never worked, right now we have an incident just like that. And that person basically will qualify.
Okay.
So it depends.
Okay.
So just to differentiate as well, never work is totally different from those
Amazing.
entrepreneurs.
Right.
Because
Right.
entrepreneurs can contribute their self-contributions.
Yes.
And how does the self-contribution work?
Well, you have for Social Security, it is employers who pay in on behalf of the employees. You have the employees who pay on behalf of themselves, and you have the self-employed. So really and truly for employees, the law, it's mandated where the employers has a responsibility to deduct the Social Security contributions from your pay. The contribution rate is 10%. So 5%, currently, it's 10%. So 5% is deducted from the employee's salary, and it's matched by another 5% from the employer, and 10% is paid in. So the employee is actually covered at 10%. For self-employed, because they don't have an employer to match, they're paying for themselves, they don't have anybody else to match, their rate is 8%.
Okay.
So, but the self-employed, actually, all the benefits that are offered to employees are offered to the self-employed that I named out earlier. And the self-employed, they actually can elect their own income. So there are bands. We have 6 bands. So they can choose a category where they fall into in terms of the income bracket that they want to pay. Because they are self-employed persons. Let's take in the informal sector, like the fisher, the farmer.
Right.
Every day is not earning day. You go to fish every day, but you might not catch fish every day to sell to make an income. So it is not like you're an employee where you have a set salary where your contributions are paid. So you can elect a band, one of the categories where you say, okay, even if I don't earn income this month, I'm comfortable where my savings or whatever, I could still be able to pay my Social Security contribution. So you can elect a band.
Right.
You choose where you want to pay your contributions on, the salary, the income that you want to pay your contributions on. So the self-employed has that advantage.
However, bear in mind that your benefit is paid based on your contribution.
Yes.
Okay, that's important to know.
Yes, so the smaller your contributions, the smaller your benefit.
Right. So let me ask a question here. Benefits are paid based on your contributions. So an employer is paying 5%, the employee is paying 5%, 10% currently. If I say, I'm working in the tourism sector and we don't have a pension plan, can I elect to contribute more into Social Security?
Not as it is, no.
Not as it is now. Is that
That
something?
happens in some countries, yes.
But is that something we can look at?
I was about to ask. So, using the very same scenario,
Mm-hmm.
I then register and say I am self-employed.
Uh-huh.
And out of my savings, I decide to contribute more. Or do you need to see something to show that I am self-employed?
Well, first, you could only contribute within the band. So when you say more, it
Well,
will
when
be
you say
more.
self, you mean I work, but I also have a business.
Yeah.
Yes.
If you're an employee, the employee takes precedence. So if you have multiple jobs, so if I'm I have my own business on the side, but I also work for an employer, then I can pay both.
Okay.
So the employee takes precedence.
That's double dipping.
Okay. There are a number of recommendations as we just heard, and so we can sort of get into whether or not some of those recommendations can be expanded
Okay.
in terms of what contributions can look like and what is the negative impact of having extra contributions as well. Is there a negative impact on the fund for someone to double contribute, so to speak, in that same scenario?
Well, they can double contribute.
They can't currently. So my question is there a negative impact if they could?
If they could. Like, would that deplete the fund more? Is I guess what you're asking.
Yeah.
Like, what would be
what's
the impact on it if the contributions get, for a small group of people, get very large, but then those persons start to get the benefits from the system. They have an accident and they no longer could work at 45, but their life expectancy is still so
we
large.
can take, for example, there is what we call a contribution ceiling,
Okay.
which is now at $7,000. So even if you make $16,000, you only pay on $7,000, and your benefits are only on that $7,000. Now, the actuary, he is recommending, but not with much urgency, because he is in the studies indicated that it's probably only about 10 to 11% who are actually of persons who are actually earning over $7,000.
Right.
But if it goes up, the ceiling goes up, then your benefit goes up.
And then you're still more stress on the system.
Well, you hopefully, and because of that short
Yeah.
10%, 11% is not as much coming in as.
I'm actually glad that you touched on that, because I did hear that recommendation from
And that,
the actuary.
and persons who came to the sessions who sent in concerned about the ceiling. It hasn't been raised for a long time. It's been at that 7,000.
So in the actuary study, we still touch the ceiling. Would any information, well, the census is going on now, would any information from the census be pegged up here, looked at this simultaneously to see where we're really at in Anguilla? What if tomorrow government makes, let me not
Don't
say
get
that.
in trouble. No, you do not get in trouble.
I'm not getting in trouble. I want to skip that. All right.
Tomorrow, our economy grows
Gross.
in such a sustainable way
Yes.
that employers
all around.
can afford to increase
pay.
and keep you out of trouble today.
Yeah, you do that for me, please.
But that employers can afford to increase pay, where we are seeing more than 10% of the population making that 7,000. And I'm going to, there's so much interconnectivity, and the reason I'm going to ask this is because we know that currently there is the minimum wage committee that's being put in place. And whether or not that will have any effect and impact on seeing possibly an increase in salaries across the board, and possibly seeing more than the 10-11% of persons
making. Yeah.
And mind you, I'm not saying that that's what minimum wage would be.
Mm-hmm.
I'm just saying that. I mean, we always have to put that out there. I'm not saying, because I know Dr. Foy sat here and he clearly stated, that's not what we're saying. But the question is, we know that there's a ripple effect when you start to see those increases. Is that something then that you would take into consideration if we see more persons passing that threshold?
Well, if the economy grows, and that is one of the recommendations, if the economy grows, the fund will grow. Right. So employment is important, because our contributions come through employment. Nowadays we're seeing a lot of people leaving Anguilla, and that has to be a concern.
So let me ask a question. This one ain't gonna get me in trouble. We do see the potential for the economy to grow. You hear about MOUs being signed. You hear about work getting ready to start. For instance, they're going to build a new airport. They have the enabling works going to start. Persons come into work. They have to pay Social Security on these temporary work permits or whatever they may happen. What happens when these persons leave? It's just their contribution to the system to being here working in Anguilla? They can say, working in Anguilla for this certain amount of time, I could file for Social Security there when I get older.
Once 10 years.
Oh,
Yes,
10
so
years.
yes.
Okay.
But this is
Pension.
short-term employment.
Right.
So the fund has a little bit of a cushion with these short-term employment. I love that. Because people would feel like there's no contributions being made.
During that time, they're insured for sickness.
Yeah,
Right.
they can take advantage of the
Invalidity.
short-term benefits, sickness, maternity, paternity, and God forbid if they die,
God
funeral
forbid.
grant,
Awesome.
Even
So
disability.
right. So it's not like they're just coming here and taking everything and leaving. They're making contributions as well. I love that. So let me go a little deeper with that. They come and they have their families with them. Even in the hotel, some people in the managerial roles, they bring their families with them. The contributions that they're making extend to their families too. Like okay, if God forbid we got back to somebody who would have passed.
Yeah, so you have the funeral grant, and then
Uh-huh.
if long enough they qualify, you have survivor's benefit.
Okay, how long you have to be? 10 years for the survivor's benefit as well? How long for the survivor's benefit?
Well, not for all the benefits have certain qualifications.
Okay, good.
So to get the pension, you must meet the requirements, and if you don't meet the requirements, then you get a grant. So the long-term benefits, which are survivors, old age, retirement, and disability, they have grants.
Okay.
So if you don't qualify for the pension, then you get a grant, which is a one-time lump sum that you can get. And based on if you meet the qualifying conditions for that grant. So it is not that, okay, you work for, let's say,
150 weeks.
the requirement is 150 weeks. But let's say if you just come in, you had 2 months working and you left. That's it. There's no grant or pension. So, but if you work long enough, then because all the benefits have 26 weeks base for contribution. So that's the base. Plus each benefit has its extra qualifying conditions. So the base, all the benefits you must have put in at least 26 weeks, which is about 6 months payment into the system. And
Just
then
like any other insurance.
just like any other insurance, because we operate on the insurance principle.
That's why I wanted to get
it's
at.
an insurance.
That's
social
exactly
insurance. So
right.
we kind of operate on a similar to.
That's
insurance
exactly where I wanted to get at, because I think if people understand that's the concept of it, then the questions I think will get a little bit less when they understand that. And forgive me for saying this, when they walk into Social Security to make a claim, it's not Dr. Lewis saying, he pushed me down in school 10 years ago, 50 years ago, he stepped on my white, what I used to wear back then, A6 RB box. It's like there's no personal intent in the system.
Conditions.
That's it right there. Just like you got insurance from any other company, there's qualifying conditions that would say how you are dealt with the system, in the system and post when you're in the benefits era?
The one difference is built on a system of solidarity.
Say that one more
Principle
time.
is built on a principle
Uh-huh.
of solidarity. So
Okay.
that would be the main difference.
And what does that mean for the listening
Well,
audience?
technically, you pay your contributions for the other generation.
Ah,
Yes.
You
I ain't gonna
so
touch that one.
I will.
So, as we were coming here, we were talking about children,
Uh-huh.
childbirth and children. So, when we see the population, and they actually make reference to that too,
Mhm.
and he shows how it went from X to Z.
Mm-hmm.
So, making babies is important
I'll tell you, wait, let me
for
put
Social
it.
Security.
Okay, not for me. 'Cause
I mean, it's
I'll tell you, I'm putting this out there now. I
But-
ain't want another one. Just putting this out there.
Not alone.
Because children just grow up, and then you gotta take them to music, you gotta take them to school. You know that they eat 3-4 times a day. That's
So did
without
you.
snacking. I did not do this to my mother. Children require a lot. So I understand what the actuary is saying about growing the population and people going to make babies. But with all due respect, sir, they make them like we used to back in the day. Because I did not come up with a chip. I think these children got a chip. But that's a different story. That's a sidebar. I gotta shut up now because you kind of let me. Wow, children. I can't. I laughing, I can't.
Sound like you had a rough day.
Oh my God, I can't. You know they stop hearing at like 13 and 14. They lose their ears. Like, I don't know what happened.
I helped them find him.
You help them find them, yeah.
One way or the other.
Okay, go ahead.
But back to the benefits and
Uh-huh.
back to the impact that the population have on the fund. Listening to the summary
Mm-hmm.
by Mr. Osborne, and he stated, families aren't what they used to be. My dad's
Totally.
generation, he had several siblings.
Uh-huh.
I have one. My daughter, lucky she is just her. It is that. And so during the generation before mine, you had more persons contributing, and those persons were contributing. That money that they contributed went into paying persons who didn't contribute, or did it go into a reserve sort of that? So
them
does it
alone?
kind of go both ways, that the contribution goes to paying the benefits for someone older, or is it that some of the contributions go that way and some of the contributions go into a savings reserve? How exactly are contributions split
It's a
up?
reserve. There's a reserve fund. However, in some countries you have what you call individual. Your savings go for you,
Okay.
but in our system, it goes into the whole pool of funds.
And I want to put.
And the investments. And investments too is another important aspect. The actuary makes reference to investment. The challenges now going on right now.
The markets are so
markets,
volatile.
Yeah.
You see, people like to think,
Let me say. I
that
think you should say.
you pay your money into social security and you sit there
down,
and
yeah.
wait for
Yeah.
them. So why you have to invest our money and run the risk of losing it and all of that. But investment is important because you have to continue to grow the money.
Yeah.
And the banks are not giving any money now in interest. So you can have millions of dollars sitting in the bank earning nothing in interest. But
A little.
we have to pay.
A little, a
well,
little.
it amounts to basically nothing.
A little.
So when
You're trying to keep your
I
job.
try to keep my job. A little.
Social Security is really for the long term.
Yeah.
So we have to pay. Once you qualify for the benefits, let's say old age, retirement, we have to pay you for the rest of your life.
Yeah.
And if you live as long as the late Ursula Connor,
Yes.
then you could actually outlive your contributions in Social Security.
Right.
So how do we continue paying that? It is investing, growing that money, and ensuring that we will always have funds there to pay you into the long term. And also the younger generation, who's a working population working, they are now helping to pay for those older persons who are on the receiving end, because if you outlive your contributions and we are still paying you your pension, where's the money coming from?
Exactly. But I
Most
like
people
to
outlive their contributions.
because Anguillians has lived long. That's the honest truth. For the most part, give God thanks for that. We live long. But when you said what you said just now, I likened it to a tree. It's not the person that planted the tree that necessarily enjoys the shade. It's not the person that enjoys the shade that necessarily eats of the fruit. And then the fruit drops down, some get eaten, some get picked. But then if that fruit don't go, more fruit can come. And that's what people need to I don't want to say they need to understand, but just from listening, I think that's a good analogy to look at why we have to pay into the system. Because truth be told,
So that's a solidarity aspect there.
Right.
And then being our brother's keeper.
Yes. That is where I think people need to understand the benefit of the system. I want to be clear on something though. In terms of the investments, nobody is sitting down by a computer and say, I should buy some stock in Apple. Like, there's thought going into where Social Security funds are invested.
Yes, we have an investment manager, we have an investment committee.
Okay, there's an investment manager and there's an investment committee. Again, I want people to understand, nobody in this room, including myself, is saying, wow, Social Security got X amount of million of dollars, this stock dropped, let's throw some money in there. Nobody ain't playing around with this money because there are bylaws that govern how the
funds can be
invested.
And risk is.
And yeah.
There's a risk portfolio.
Yes.
And actually again makes recommendation to update our risk policy and update the investment policy. So
this is a good point to dig a little deeper into this report.
Actually, yes.
Right.
Okay,
So,
I'm listening.
again, going back to Mr. Osborne's presentation, he made mention of a number of things. One that stood out to me, though, was when he stated that there is no legislative framework, because I think actuary is done every 3 years. And with each actuary review, there are recommendations. But there's no legislative framework to institute the recommendations that are made. And so he didn't quite say it, but I do want to know, were there recommendations made over the past 40 years that were not instituted? Because I do note that we are now at the point where we are saying, if nothing changes, if the rate of contribution doesn't change, if the rate of benefits don't change, if the retirement age, the age that you pay out those retirement benefits, if that doesn't change, that the fund would be essentially depleted in the next 13 to 17 years, between 2035 and 2038, 37, 38. Were there recommendations that were made in the past that have not been implemented? And if not, if so, how do we ensure that these recommendations now are implemented?
From my past experience and knowledge, I'm not aware of recommendations that were not implemented, or strong recommendations. As some may know, we had 2 actuarial reviews, and so we changed our actuary. Reading the actuary reports from our previous actuary, Mr. Montes, he would have spoken to some of the same things. However, the recommendations weren't as strong as the recommendations coming out of this report. So I can't say that all the recommendations that were previously recommended were done or not done. I would have to go back and review that and then I'll be able to answer your question a little better. But from my experience, just off the top, a good amount of the recommendations would have been implemented. And it has a process. It comes to the board, the board reviews, it goes to Executive Council, and then it will come back with decisions of the recommendations which were approved and which were not approved.
Okay,
It's
so
a process.
just so we know, the board decisions, not all board decisions, are just made and ratified by the board.
They're right, they will have to.
They have to go to Executive Council, and government makes a decision in
Final
Executive
decision.
Council as to what actions
Right.
need to be taken
So
when
for
steps.
example, the hottest one right now is the
Yeah.
increasing the contribution rate.
Uh-huh.
While the board has approved that recommendation, the council, after these consultations that we had, council acts at Social Security and the Ministry of Finance do these consultations.
Right.
And before they make their final decision.
Of course.
So now, will the consultations have been done? And we wait now to hear from council. If there are any changes to the contribution rate, and that was a concern raised,
Mhm.
legislation will have to be in place.
Right.
Um,
I think the premier touched on. It was the premier that touched on that. Somebody touched on that recently into things looking into the next budget. It was the premier, I believe, when he spoke about the Ministry of Finance. That's one of the considerations. The 6%.
No, I know what you're talking about. You're
Tell me.
talking about the pensions. I mean, we spoke about the
yeah,
increase in
right.
pension,
Pensions,
and this is the public service pension
Pension,
fund.
right.
and,
I know that's where we spoke
Yes,
about
okay.
the increased
That-
contribution.
and I think there's been some mix between the pensions, public service pension fund, and the Social Security.
Yeah,
There
but
is,
we usually get
right.
confused.
Right.
But I
So
just
I
did.
want-
Like,
Me too.
yeah,
So
yeah.
I wanted to clarify
Uh-huh.
that, and then to ask. We know currently the contributory rate is 5% from employers, 5% for employees. What is the recommended contributory rate for Anguilla?
The actuary is recommending it go to 12%, but he took into consideration certain things, what's happening now in the economy and in GST and all of that. And he's recommending that it be adjusted by 4 annual adjustments of 0.5% each, starting in 2023.
Okay, so 5.5%. 5.5%.
5 and a quarter.
Quarter.
5 and a quarter.
5 and a
Yeah,
quarter.
And then,
Okay.
so it sums up.
So 10 and a half.
Okay, so
Okay.
okay, I like that.
Yeah, it's a
So it-
phased approach instead
right.
of bringing it on one time where you're paying.
But I
at the
could
higher
have
rate
I could have
phase.
sworn that the talk on the street was like, yeah, they want to raise the contribution rate, and we done can't take no more. 0.25%. It's not insignificant, but it should be palatable.
So I agree.
Uh-huh.
That I do like the phased approach as opposed to a
Yeah.
full on 6%. Because I'm assuming that's what you intend to get.
To-
So
to 12.
6% employee, 6% employer. But I also note that there is a recommendation for an additional contribution for the unemployed
The
unemployment benefit,
Right.
because I think we are all aware that in 2017 when we had Irma, and then just
COVID.
3 years later when we had COVID, that there are persons who are able to benefit from the Social Security Fund through an unemployment benefit, having never paid into an unemployment fund. Is that recommendation one that the board has approved and is at the executive council level? And if so, what is the considered contributory rate for an unemployment benefit?
That has, as I spoke about the other actuary, that has been up there for some time. I think everyone, the board and everybody basically agrees that we should have a funded unemployment benefit. However, it's always to do with timing.
Right.
And when we put these things in place, we waited after Irma, I think we waited a little, probably too long. And then we had COVID.
Right.
And now we have GST and we have everything else. The actuary, somewhere in the report he makes reference to 1%. However, I don't think it has been concretized as to what the full details of that benefit would be. But yes, the board would be in support of this.
Is there
But
any
council, again, as you asked,
council have to
is
approve?
available.
Is there any other way we can look at that measure of security and insurance? 'Cause this is what it is. From, say, perhaps an employer standpoint alone, and not necessarily, will that be a 0.5 match, like how the actual rate is? Is it 1% from each? Like, if
What's the consideration?
I think it would be at 1% in total.
1% in
Yeah.
total. So
But again, the details haven't been
okay.
fleshed out.
Okay, the details haven't been
Yeah.
fleshed
Fleshed
out.
out, yeah.
Because, I mean, like, I don't want persons to go away thinking, okay, we're looking to increase the contribution rate to 12% and thinking that is 12% from the employee. No.
No,
It's
no,
match
no.
contribution.
Yeah.
And if we're looking at doing, well, it's not discussed in any detail, but if we're looking at doing the unemployment, then that possibly could be matched to like a 0.5 or whatever. We don't know what that would look like.
I mean, it's one thing to say that, yeah, if we know it's needed, an unemployment benefit, and it's one thing to say we need an unemployment benefit and we need it now, but offering an employment benefit isn't easy.
Mhm.
Isn't something that you can just jump up and do. So it has to be carefully looked at and look all the parameters and see what's the best way to offer it, and it has to be costed, because all the benefits that we offer comes at a cost.
Right.
And so currently some persons might think, well, why do we have to pay more? We're already paying whatever. I know you're going to increase the contribution rate on us, so why do we have to pay whatever extra for an unemployment benefit? But currently what we are paying are for the benefits that the system was designed for that.
Yes, and then you
So
had to pay
anything
out, right.
additional now has to come with an additional cost to cater
Right.
for it, because it's not catered for in what the current contributions are. So, and everything comes with a cost. So yes, we need it,
Yeah.
and there are persons who are willing. So far, I haven't heard. Of course, you'll always have the negatives, but for the most part, persons are saying yes, we need it, and yes, we're willing to pay for it, because having gone through Irma and the
Then
pandemic,
COVID,
they
yeah.
realize that we do need it, and so it's for everybody to really support that. Yeah, we have to pay for it, and then you have to find out the best way to pay for it,
Totally understand.
so that it will not be too much on
A burden
the-
either
yeah,
way.
Because you don't want to overburden persons
Yeah.
either. You know,
Because
we
persons
want
already feel that they're overburdened given
Right.
the current
you can.
economic situation.
I could only imagine that it's a hard pill to say to someone, pay into this for your future while not being able to survive in your present.
Yeah.
or the other side of it, where people think, well, what if I don't live? So that's another challenge we have with persons getting to understand, or life isn't guaranteed.
The man
But
who
so
plants the tree may not sit in the shade.
that you just
Yes.
have to understand
Yeah.
that.
So I wanted to kind of go back to another one of the recommendations where lost my train of thought. But it was looking at raising the age from 65 to 75. Sorry, 65 to 67. Oh my goodness.
Disclaimer: 65 to 67.
What did I say? Where did
Where did that come from?
1975 something.
Do
I
not
have no-
scare the
No.
public.
Listen, that one
But
gone
raise-
viral already.
Let's take it
Let's take it back. Let's take it
It
back.
is 65 to 67, so an increase of 2 years. Is that something that we are seriously considering? Is that one of the recommendations that is a strong recommendation, or a maybe recommendation?
It's a recommendation on the table. The board, how should I say, the board is not seen it as immediate as 2023, in the beginning of 2023, but it is something that the board will discuss further. I know at the consultations, the Premier expressed interest in it. So I think it's something on the border, and again, council again would be.
Right. So will this impact retirement age?
Yeah.
Yes.
Well,
So legislatively, there's a lot more changes to consider with something
well,
like this.
when I say impact retirement age, as we know, back in the day, government workers retired at 55, and Social Security has always been at 65. So there was that gap.
Right.
If it moves to 67, now retirement age is 65, general retirement age. So there'll be a gap. So it's.
So what happens in that gap?
Right, you either have to go and work if you don't have a private pension, or you don't have government has a pension system.
Now that you mention, I ain't gonna get in trouble. I promise I ain't get in trouble.
Okay, let's see.
Now that you mention the pension for government, and you don't have a private pension. Like when I was employed in the, let's not go right there. You have 401ks, you have all these other things that you hear about when you're employed in the U.S. system or other systems. Is there any thought, recommendation, or otherwise for Social Security to kind of operate a little more structurally with some sort of pension scheme? That scheme, you don't like that word, right?
We don't like it either.
I know. Simply because one of the conversations that we had recently yielded to the need for that. Like, I had people messaging me after I sent out that show. Yeah, like we persons in the hotel sector, in tourism, in everything outside of government, they are now saying, yeah, we need some sort of pension plan for us.
In some countries, it's legislated.
Okay.
And legislated that you have, actually they have a social protection. Everybody gets that basic. Let's say it's $100.
Okay.
Everybody gets it. It's not means test. It's not. Then you have Social Security.
Right.
Then you have to. They call them houses. You have to choose which one you're going to invest in, and you have. By law, you have to make that contribution there too. To a separate. So it's not Social Security, but by law, there's established a unit for that.
Okay. And how far are we from something like that here? Like, is that a conversation that we're having?
I haven't heard that conversation.
And then,
These are conversations and conversation starters.
Because that's what happens. Like when you literally just go back. All that we've talked about with respects to this life after work, if you want to group it as that, those are the serious conversations that people are having now. I think COVID opened up persons' eyes. I think Alma opened up a lot of persons' eyes. And then just the complexity and the fragility of life, and you don't know, have persons thinking now. Like, I mean, you ladies laugh when I say I don't want any more children, but think about it. It's one more person to be responsible for. Yes. Not to say that, like, I think as a father, as a mother, everybody in the room, you have children, you know that's your responsibility. You're not thinking that, okay, if I can't take care of them, social development will, my Social Security will. Nobody's thinking like that. We're seeing it right now, there and then. So, Dr. Fay touched on it. He said this minimum wage that we're talking about is not going to address all the social safety nets that needs to be in place, and that's the reality of it. But we're making a move towards trying to make sure that the system, the bottom, don't fall out of the bucket, and that's what the actual report speaks to.
Also, let's say, National Caribbean Insurance, for example, they have a private pension.
I heard that ad on the radio.
Right.
That brings me to another question, but I'm going to leave that alone.
And it all comes down to education. We need to educate more from us,
And planning for your future. Planning for your future, because Social Security is just one pillar. One pillar. You're supposed to have your savings, and you're supposed to have investments, other pension plans. So, and like Maglan just said, that NCI has a pension plan that they offer. So it's for persons to plan their future, plan the security for their future. So you don't only just work for today and just squander and just don't think about, well, what could happen down the road and that I will live long enough to be able, whether our next disaster would hit. What you don't know what will you be faced. So you plan and you make the necessary provisions for later on when you're no longer be working. So young people coming into the workforce think that, okay, well, I'm young, I have all these years ahead of me to make whatever. No, from then you have to understand, so, okay, Social Security is one thing, but will it be enough?
Right.
It won't be enough. So therefore I have to save and I have to also invest where I can. That's something we need to think about, investing.
Right.
And I also have to look at where I could also have a pension. So like those hotel workers, there are no pension plans in place for them. So you go out and seek one. So if one doesn't currently exist, one should, and I think something should be done where those hotel workers should have a pension plan. But in the absence of that, okay, now you're hearing that NCI offers one. Go and check it out and see how you could pay into that, where that could be another sort of safety net for you.
And not to just hook on NCI, maybe Nagico offers
other insurance.
Insurance.
So you just education.
I think that's what you're going to like. I think persons would prefer to sit down and be spoon-fed about it, but conversations like these actually kind of like motivate you to ask the questions, because truth be told, there are options out there. There are options on the ground, there are options regionally, there are options internationally that you can look at.
And it's just like with medical insurance. So you have majority of the persons don't have health insurance, and medical, it's very expensive. So healthcare is very expensive, but people are working and they just tell themselves they can't afford it. I can't afford to have insurance. So you just work, but if something happens and you can't afford the healthcare,
right.
So government has that burden of trying to cater for you, when all you can do is go out there and check with the insurance companies and see how if they have affordable plans that you and your family can buy into and protect yourself. So it's the same thing. You have Social Security if you're working, yes, but will it be sufficient? No. So what other options do I have to ensure that I could secure my future, my financial future? Shop around.
I wanted to go back a little bit to, again, the recommendations, because the train of thought that I lost, train came back.
Straight in the station.
That's right.
One of the things, and I know that we are winding down and coming out of time, but one of the things that was very notable to me was that currently the administrative costs are at, I think he said, somewhere between 25 to 30%. 27%. And that we are looking at in the near future, administrative costs can be more than the incoming contributions, and soon thereafter be more than total income. So I'm assuming income means the contributions and any return on investments. What is being looked at to reduce administrative costs? Is that something that is being looked at?
Okay, two things. The board staffing would be one of the highest elements of that cost. And the board has placed a temporary hold on hiring any new staff, and is looking at restructuring the organization so that current staff could carry out other roles.
Okay.
So that's one element. Another element we have, I guess Roseanne will have 2 minutes to put in on that plug, but we have a new system, new administration system, and upfront that cost would be, there's a maintenance cost that comes with that, which is pretty high. However, we have the best of the government's IT staff, and our staff, we store them,
But you're talking the truth. Shout out Miro, shout out Canvas. You're talking the truth.
I will not allow you to go down that road because I hope to have IT on here soon.
Dice will be here. But wait, I wasn't done yet. What I was going to say, Adrian, stay where you be. Vaughn, stay where you be. Garson, stay where you be. Because nobody going to come out here recruiting. And then government left. I stay where you be. Okay, carry on.
So, though eventually, some of that work, the contractors we have, Bearing Point, we'll be able to do in-house, but
Good.
we'll need their support. For, as the system is new, we need their support for probably about 5 years.
Okay.
We're hoping, and then we'll be able to.
I'm going to say something here. Can I say it openly? We got some really talented persons in Anguilla.
Right.
I don't care if I get in trouble for this. I have a thought process. You have NCDS that does similar stuff to what Bearing Point and other persons provide. They do switching to collect on your cards, all this type of thing. You have DITES that is a robust department. They servicing all kind of people. You have the excellence in two individuals that you stole from DITES. But I think there's enough on the ground that if we can kind of like be able to merge resources and kind of look at economies of scale where the talent in the IT infrastructure is concerned in Anguilla, something needs to be looked at.
Right.
Because I am pretty sure that if you didn't have to take on the burden of having them full-time on staff, but there's some sort of working relationship and contributions where you can yield on this talent here, that would be something to consider for a lot of people. Just throwing that out there, like there's talent, there's resources, and when you build these systems, like you're going to talk about now, there's support and maintenance that has to happen for these systems that we could lean on locally. So I'll leave that
build up our
and
own.
build up our own. Not taking nothing from Bearing Point, but I know we got talent here. I've been around it. I know these guys, like, I take two good ones, Well,
I will ask Rosanna because I like when our guests leave an open invitation. I will ask Rosanna to give us an introduction to this and then come back and
Certainly.
we can go in depth.
Yeah, because what we can
this.
do, we can actually like click and go through and really work the system. Alright. You gonna bring one of those guys with you?
Yeah.
Okay. Then I can talk to them. Without it.
So we know sometime soon we will have a part two.
We will have a part two.
Yeah.
All right.
Also, the multi-benefit solutions, which is our new e-services platform. As Maglan said, we have a new social insurance administration system, and that Bearing Point created for us. We launched it, the first phase, because we're launching in phases. So we first went live with phase 1 in April of this year, and phase 1 was the registration of employers and getting them to file their contributions online. The existing, the past way of filing contributions, we had the paper form, so we're basically going paperless. So we had a paper form. Employers would fill that out with the wages of the employees and the contribution and submit that with their payment into Social Security. Come in, bring in, make their payment. Now with the e-services platform, the new system, you do all your contribution filing online. So employers now can stay within the confines of their workplaces or home, and they can just log on and they can just do their filing, whether for themselves or self-employed or for all their employees, and upload it. And they don't even have to come in to pay. If they want, they can do their checks, drop it in the check box. They can come and pay the cash at the cashier still, but they can also make the payment through the banking system through online banking.
Okay.
Right? We are not doing credit cards or using cards yet. I don't know if we'll get there because that's a cost, but you can actually pay through the banking system through online banking. So that is what we have been doing from April to now, and we are encouraging employers. A lot of our employers have still not registered yet and not on the portal, But what we want, so we continue to encourage the employers. We're thankful for those who have come on, but there's still a lot more that has to register. We want every single employer on the portal, registered on the portal, and using it and making their contributions online. But we're getting ready to roll out phase 2 of the system, which is bringing the claiming of benefits online where the employees are concerned now.
Nice.
So with phase 2, we need to have every single employee registered on the portal as well to be able to file their claims online. So we're going to be, very soon, we're going to be launching a registration drive for the employees, and we're going to be trying to get all the employees out there in the workers to register online so that when we launch and we go live, that they can file their benefit claims online. We're starting with 2 benefits in the first instance, and then we will keep adding the other benefits. The 2 benefits are sickness and maternity.
Awesome.
So when we launch in the new year, 2023, we roll out those 2 benefits, then persons who are on sick leave, and they can file their sickness claim online. So no more paper.
Good.
So eventually there will be a cutoff point where, in the interim we will still have to work with the paper, but eventually there will be a cutoff point where they will absolutely know you have to use the system because we invested in the system. You have to use the system.
I like that.
Just to add there, for COVID-19, when we had the unemployment benefit,
Yeah.
it would be a similar process, and everyone caught onto that
It's going to be
instantly.
Yeah,
basically.
it's easy, it's user friendly, and the requirements are everybody need to have an email address because the system requires you to register with an email address. So you all have social security numbers. The employers have their social security number. The employees and self-employed, they have their social security number. So you need an email address to register with, and you create a password. You log on to this, and you can use any electronic device. You can use your cell phone to register. You can use your tablet. You can use a laptop, computer, whatever electronic device, and you can register. So the registration is a pretty seamless process. It takes 5 minutes. For the employees, they log on to the site services.gov.ai, and you just follow the information: email address, create a password, and you log on to the portal, and then that's it. There's an activation code that will be emailed to you. When you put in your email address and create your password, you get an activation email. You click on the activation button, and then you log back in using that email and password that you just registered with.
Nice.
And then boom, you request a code that's generated in our back office. We give you that code, you put it in, and you're registered. 5 minutes and you're done. And so that is what we're going to be doing, and we've started doing that already. That is all that's required for now.
For now.
Okay. So viewers and listeners, you're going to be hearing from us, and we ask you to accommodate us. We're going to be out there in the field with the places of employment. We've been doing registration Fridays. We already started on Friday. Every Friday, we're out front with our table, and as persons come into the office, we try to get them registered there.
Perfect.
Ultimately, you'll be able to scan from your same phone, scan and upload your claim.
Your claim.
I think that needs to happen now, because I got some in my thing in the car. I just can't go there and drop them off. I love it. Thank you very much.
This has been an extremely informative session. I appreciate you, Dr. Lewis and Rosanna, for coming in, speaking with us. Rosanna, this is an open invitation. I expect that part 2 will be back very soon. You work with your technical guys. We can do a live demo as to how persons
we
can
would
register.
Love to show the demo of how the registration process.
And I think that is something that we can do pretty soon.
Pretty soon.
Very soon. So thank you for being here. I have appreciated, and
Yes.
I think one of the things that Mr. Osborne spoke about was the general buy-in by the public of knowing what some of the concerns are and understanding the recommendations. So thank you for having the public consultations. Thank you for coming here and going a little bit further as well outside of the scope of the public consultations.
And I'm sorry, just want to say to the public that please, info.ssb.ai, email us and air your concern. Let us have we want your feedback. The consultations are over, but we still need your feedback. So please email us.
Repeat the email again for our listening
info@ssbai.
All right.
And the full report is available on our website.
Yes, I was just going to get to that.
Yes,
The
and
full
we ask
report is available on the
persons, check
website.
our website, get the report, go through it, read it. Whatever you don't understand, you can contact us. We'll be happy to clarify things for you, but be informed. Don't just listen to gossip or
You can say it.
Be informed.
Be informed.
be
No.
informed. The information is there.
Okay, good.
Get access to the information.
I will take it a step further, and I'm going to tell you, other than the report being on the website, the consultations were aired on Facebook. They are there.
Yeah.
You can check on YouTube. Do not wait for Melee Monday to talk about where we're going with Social Security. Let's talk about it now. info@ssbai.com. Call the phone number 1264-497-2201. I got it correct because I called it yesterday. Reach out. We're not holding information over there. We want persons to be informed. Reach out. And let's have the conversation. I'll continue the conversation.
You can come to the office.
Stop by the office.
If you see any Social Security staff, Maglan or myself, you can always stop us. Ask us a question. If you need to have us come to you and your staff or whatever, contact us. We'll be willing to do that.
Awesome. And on that note, this has been another excellent episode of Progress Report. Updates and conversations from the Government Information Service. Thank you for listening. Thank our guests from the Angular
you for
Social
having
Security
us.
Board for coming.
Thank you.
This won't be the last.
Definitely not.
Definitely not.
Sooner rather than later.
All right, ladies and gentlemen, thanks for listening.
I'll be waiting for the call.
All right.